Welcome to episode 60 of The 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week, we bring one stock, one headline, and one reason investors should care.
This week, as markets obsess over onboarding the latest in AI technology to reduce redundancy, increase efficiency, and more effectively generate value, we're looking into the future of data analysis with a pair of stocks excelling in the burgeoning field of quantum computing, which seeks to harness the principles of quantum mechanics to solve problems beyond the capabilities of classical computers. John kicks us off with a profile on one of the pioneers in the space.
D-Wave Quantum, ticker QBTS on the New York Stock Exchange, has a market cap of around $8.5 billion. Now, quantum computing sounds like complex sci-fi stuff, but here it is leveraged to support AI's growing infrastructure demands.
Heard of D-Wave, John? It's a relatively young company. Tell me more about its relationship with AI.
D-Wave Quantum can give investors a way to tap into the next wave of computing as AI data centers push traditional chips to their limits. Its quantum technology isn't meant to replace today's semiconductors, but to work alongside them, handling these complex problems more efficiently, which makes it a higher risk, higher upside bet on where AI infrastructure could be heading.
And where is it heading? How does D-Wave fit into this overall movement?
Well, D-Wave's technology targets real-world optimization use cases, such as logistics or supply chain management, even energy grid efficiency, and, of course, AI model training optimization, all of which are becoming more computationally intensive under AI data centers' big build-out.
Okay, let's talk performance. How has D-Wave stock managed under these market conditions?
Now, it's been a colorful situation, so since the year began, QBTS stock has slid around 10% as of this recording, but it is up over 120% since this time last year. We could see some more movement soon, as on May 12th, coming up soon, the company is set to release its Q1 fiscal results. I took a look at last year's Q1 results in the company, and D-Wave reported record quarterly revenue at the time of $15 million. That was up more than 500% year over year. And when that news came out, there was a bump in its share price. So it's likely we could see that happen again this week. The stock's price has lowered to just under $13 US in March, but has been hovering in the high teens to low $20 range since mid-April. D-Wave stock peaked at an all-time high back in October of $44 US. Now, I bring this up because if you look at their stock chart, it's a very stagnant line around $1 to $2 for the last couple of years until the semiconductor surge infiltrated our lives, and now we see these bigger swings in price.
Play devil's advocate, John. If D-Wave is able to take full advantage of the AI boom, would that not also mean that it stands to suffer the most if the bubble bursts?
Well, that's a good question. Quantum computing won't be fading away at the moment a shiny new thing comes into our view. So from what I've read, it is expected to complement classical semiconductor architectures. That's what D-Wave is doing, which will thrive out there, regardless of what happens with AI. And there's always more than one way to measure success in this field. And speaking of that, actually, Trevor has another quantum stock to tell us about that operates a little closer to home.
That's right, John. My quantum computing stock of note is Xanadu Quantum Technologies, market cap 8.45 billion Canadian, the first pure-play photonic quantum computing company, based in Canada, of course, whose Aurora model recently made headlines as the world's first modular, networked, and scalable quantum computer.
That's heavy. So let's break down all this conceptual complexity for our listeners. How has Xanadu differentiated itself in the quantum computing marketplace?
In the most basic sense, the company is the first to successfully build a quantum computer using photonic chips, which offer numerous advantages over traditional approaches, including no cooling requirements, greater error correction, modularity, and networking flexibility, as well as faster speeds and telecom compatibility. The company pairs its hardware with Penny Lane, a hardware-agnostic quantum software platform that allows developers to work in Python, a well-established programming language, and connect with AI and classical systems, including Microsoft, Google, and AWS infrastructure.
Given Xanadu's more efficient approach to quantum computing, Trevor, what should investors expect from its near-term future?
As stated in the company's 2026 Analyst Day presentation, the answer to your question, John, is meaningful end consumer commercialization by the end of the decade, underpinned by a full stack platform spanning proprietary hardware and software, as well as strategic partnerships. Xanadu has begun to deliver on these rosy prospects with partnerships with the likes of Volkswagen to simulate battery materials testing, with Mitsubishi Chemical to simulate EUV lithography for semiconductor development, with Rolls-Royce to simulate fluid dynamics for the purposes of turbine engine development, and most recently with EV Group to produce its photonic quantum computers at industrial scale.
Well, it's a promising picture you're painting here, but has the stock matched up to the company's potential to usher in computing to the quantum era?
Not quite, John, and there lies the opportunity. Having added a respectable 44% since listing in March of this year, backed by numerous high-profile deals that validate its software, Xanadu's hardware go-to-market strategy is only getting off the ground, making an investment today a ground floor opportunity in what could turn out to be a top stock in the quantum computing space.
Let's end the Big 60 episode with a note on risk for our listeners and next-gen technology investors more generally. What does Xanadu have working against it?
Though revenue positive, the company remains predominantly an R&D play, booking $70 million US in net losses in 2026, down from $46 million year over year, making it heavily reliant on partners and capital raises to trace a path to profitability. And while it's in discussions for more than 400 million US in Canadian and US government funding, realistically, this won't last long before more sponsors or internal cash flow will have to come to the rescue. All this is to say, investors should keep Xanadu honest in terms of consistently delivering on development milestones while making sure to right-size their positions so they can stick around for at least 5 years before determining if the company was successful at cementing its quantum computing leadership position.
As always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with D-Wave Quantum Inc. and Xanadu Quantum Technologies Limited and is intended for informational purposes only. For full disclaimer information, please visit stockhouse.com/legal/disclaimer.